You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. David, welcome to the show.
Good to be back, Jim. It's a great day to be looking at the precious metals market, in my considered opinion.
Today's show is entitled, How to Play the Gold and Silver Market, which appears to have bottomed. Well, how do you?
I pose that as a question, and I think the question is it a major silver-gold bottom? And I think there's a high degree of likelihood that it is. Nothing certain, but you go by the odds, and if we assume that this could be the case, then how do we play it?
Well, what would your first step be?
The first step I would do would be to clean out the deadwood, stocks that you think are on life support and may never rise again, and there's some that are pretty apparent that nothing much is going to happen on the good side. I'd get rid of them, take out a little bit of money you have, and put those into some dogs that bark. And it's fairly easy now because we're seeing some of the really good stocks that are very quickly moving upstream. Some of them have risen 50% from their lows, and they're holding those moves. And so we know that those are some of the better ones out there because the best ones start rising first, the old saying that cream rises to the top. So if you have some favorites that are moving in that direction, you might want to redeploy those funds into those stocks or add more to one that you already have.
Is this a time again to dig into your research and find out who has the best chance to stay healthy and profitable?
It really is, because just because the stock is moving up this week doesn't mean it's going to be one of your better ones or even one that's going to make it. But that's an indication. But you go back, you do the research, and what I would say, of course, I'm prejudiced about this because I work with David Morgan in the Morgan Report. But, we have a tremendous listing of companies which have served the test of time. All of the stocks are down from where they were a couple of years ago, but we have a lot of good survivors. And some of the stocks that I've noticed in the last week or two are ones that have been very strong on the upbound. So I have access to a lot of different market letters, and I think ours is one of the very, very best for people trying to put together a quality portfolio because it gives them a lot of good suggestions. So if someone listening is not a subscriber to the Morgan Report, I think that they could do a lot worse than to subscribe and see for themselves if they think it's as good as I think it is.
An investment house in Las Vegas has told me for the last couple of 3 months, their phones have been quiet. All of a sudden, in the past 2 weeks, people are again interested in getting into the gold and silver market. Is that a good sign?
It really is, and I think the mood is changing, the psychological mood, because, the metals themselves have been very strong in terms of purchases, even though the price has been soft. But now people are looking at those mining stocks and they're seeing this massive disconnect, which in some respects is greater than it was in the last 10 years of this bull market. And they're saying, you know what? This is a rubber band that's being stretched so far out of shape that it's either got to snap or come back into some kind of equilibrium. And the good stocks on that continuum are going to come back. And I think 6 months, 12 months, 18 months from now, each of those markets, people are going to go, man, I can't believe where these prices are compared to where they are today. There's always risk above zero, but if you wait for prices to go where you think they're going to go, now you've got a new set of risks.
David, hold tight. We have to take a break now. You're listening to HowStreet.com radio. We'll be back right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. My guest is David Smith. He's the senior analyst for the Morgan Report. David, I know we're taking a look at how to take advantage of what looks like the bottom of the gold and silver market. But let's put our eyes overseas. You were the first one to mention great concern about Zimbabwe nationalizing precious metal mining. Other areas of concern as well. Maybe let's take a look. Has Zimbabwe had the big impact you feared it would?
Well, the thing is, this is just one more nail in the coffin of supply. And so Zimbabwe is not going to be an overnight mover on any of these markets, but it's one more effect at the margin which throws up the question of how much supply is going to be there. South Africa, big time, has been on people's radar screens about that, and this is just one more indication. We have problems in South America with, things coming out of the woodwork about whether or not the governments are going to charge more fees or they're going to pull mining permits or whatever. So all of this is getting to the point where people are more concerned about what's that supply going to be, whether it's the PGMs or gold and silver. And I think as you look at your portfolio, for example, and by the way, the things that I'm suggesting are things I'm doing in my own portfolio as well. So this is not just theoretical in my head, but it's things that people might want to consider. But if you have a core project, a particular company or a series of them that are down sharply, and you've kept that core and you've ridden it all the way down for whatever reason, and you still have tremendous confidence in that company, if you've got a company that was selling for $13 2 years ago and it's selling for $3.50 now, and you still have confidence in that company and you have the money, it might not be a bad idea to add some more to that so that you can get back to break even a little quicker.
Also on how to play the market right now, everybody else with half a brain in their head is looking at the prices right now. They're incredibly low, but can you be overly tempted to say, well, obviously it's at its lowest point, I'm just going to throw everything in at it?
I think going all in is always a risky proposition, and again, this is the sort of thing I used to do years ago, but I don't do it anymore. There's a saying that when prices are going your way, your position is always too small, and when it's going against you, it's always too large. And so I think a certain amount of being conservative and keeping some dry powder is important, but you can reconfigure your portfolio and you can make selective buys when the prices go where you want. For example, some of these stocks, some of the ones I'm following that have gone up 50% in the last 2 weeks from their lows, you could try to buy those as they move back down against the 50-day moving average if they're trading above that, because that's where technical traders look to add their positions. And you, for example, on some of these leveraged ETFs, which I think is another good tool as opposed to a core holding, but leveraged ETFs, which gives you 2 or 3 times the move of the underlying stock or the metal, can really juice up your portfolio, and you can put a stop below the lows if you're wrong, and so you might have a risk-reward of 4 or 5 to 1 if you did something like that.
One of the business channels I was watching today, they only had one recommendation for gold, and that was one of the very largest companies. They said a lot of these juniors are in a lot of trouble, and if they have a major write-down this fall, you might be left holding the bag. Is that a big concern?
Well, it's always possible, but here's the thing. If you're an uninformed investor and you're just throwing darts, you're going to come out about the same way these people are that they're talking about the gold stocks, because they're not gold bulls anyway. It's easy to say buy one of the 2 or 3 largest gold companies in the world and maybe you'll make some money, but you have to take a little effort to dig beneath the surface and find the quality miners that have held up very well, that have cash in the bank, that are producing. Even if they're not making any money right now, they're producing. A couple that I know of are not producing at all right now, but they can start up very quickly when prices recover, and they've cut their burn rate way down, and they continue to add resources and reserves. So they're not sitting on their hands. And so you just need to get acquainted with the better stocks, and then if you like them, take a position. If you're going to just depend upon the people that talk about every investment under the sun and they're masters of none and be able to talk about everything, then you're going to probably be disappointed if you're looking for outsized gains.
Is the management style of some of the companies you're looking at very important? Some, are very loose with their money. Others have always been tight.
It's absolutely critical. And some of the companies that I follow that I've held positions in for 4 or 5 years, every time something comes up, they've handled things the right way, the best way. And so they have a track record, and I have no doubt that they're going to continue behaving the same way in the future. And if they don't, well, then I might sell the company. But for now, they're continuing to do what they've always done, and that helps me to feel comfortable to add to my position. And if people decide to do some of these ETFs like Nugget or AGQ or USLV or GDXJ, for example, just mentioning a few of a number, if you get a 25 or a 50% profit, what's wrong with selling a third or half of that? Because if we enter into a chop before we get into a big breakout price-wise later this fall, you'll be taking some profit, and if things go lower than you expect, you'll have extra money to buy back lower. So hold on to the core positions, but do some selling on some of these additions that you're making and some of these leverage ETFs, and I think you can do very well.
Is your message, don't panic if some of these things go down, especially in the fall, because that's traditionally when they do write-downs. Perhaps they're doing the right thing, acknowledging losses so that they can move ahead.
That's true, and we've always talked about this. No matter how sure you are of a price level or a company, you don't go all in with that position at that level. You buy in tranches, and you try to buy in weakness. So, for example, the companies that I just mentioned recently that are trading up 50% over the last few weeks, you try to buy when they drop 25%. And you may or may not get filled, but there's probably a better chance than you think that you'll get filled on weakness. But if you just go all out and buy now, well, chances are you're going to be regretting it for a few days, and maybe you'll have the courage to hold on and you'll be right at the longer term. But in the interim, there's a good chance that you'll sell out of the loss. So it's all about preserving your psychological capital and your financial capital, and then being patient, what you've done, taking your positions and setting your stop losses and things like that. Because I feel very strongly that regardless of when this move gets underway, I really believe it's forming now. It's forming a powerful base. But I think we're going to see massive, unpredictable, explosive moves in both directions going forward over the next 6, 12, and 18 months. And as the Canadians would say, here in the United States, we say it's cast in stone. The Canadians say it's written in the rocks.
And I'll have one on the rocks when we're done.
Sounds good to me.
Thanks a lot for chatting with us. David Smith has been my guest. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.